Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody, Merry Christmas to everybody. So today's Christmas Eve, great time. Anyway, we have prepared the report as usual. There's a vehicle report, fundamental report and technical analysis on the short-term situation. So since in general the news stream in this week was not really very wide, we have considered some latest data that have been released, how it impacted the gold market, but today we have decided to prepare some specific report on the gold market, which by our opinion explains many things that's now is going on in the world. So we will take as wide view on the overall global situation as possible. So this is a bit long read, guys, but it's very interesting. So when I have read it, this information, it was really big joy to read it, big fun. So I think you will enjoy it. I'm not too smart actually to provide the analysis of the such degree of the confidence. So this is not my personal article, but I have decided to share with you because it explains and many things shows the ongoing geopolitical processes with the correct angle and explains many things. And actually, when you will read it, you probably will have no doubts that in the current environment, in this situation, gold really have really inspiring potential in the long term. So it really explains and confirms many things that we have said previously in the previous reports. It just takes together all the part of the puzzles of these different conflicts, ongoing political situations, some other events in a whole picture, and you understand what's really going on. So I think that you will have the really big enjoy with the reading it. So speaking on the technical part, here we do not have a lot of action. In fact, despite that our previous week trading plan has really worked nice, so the targets have been reached. But at the same time, if you'll take a look at the higher time frames, as you will see on the monthly picture, on the weekly chart analysis, here we have big high wave pattern on the monthly chart, and we suggest that hardly it will change on the next week. Most probable that next week market will just floating around this range. We do not expect any breakouts, if of course nothing absolutely exceptional will happen somewhere, say on the Middle East or somewhere. So supposedly it should be relatively quiet week, and probably market will spend this time inside of this range. And since we have the high wave on the high time frames, as usual, the next direction depends on the breakout. So if we breaking down, we get some A, B, C top D pattern, deeper retracement. If we breaking up, so correspondingly here we will get some kind of the continuation to the other targets. So this OP stands 2130. XOP I don't have an XOP here, but we have mentioned the upside targets on in the report. So approximately it's a 2270 area. If we will get upper breakout, maybe here is what might be the big butterfly also to be formed. We will see it. But conclusion as follows. So direction will depend on the breakout of this range from 2143 to this lowest around 1970. And market currently keeps chances on the both directions. So our opinion that gold market still has more chances to proceed higher, and just based on the sentiment that stands around the Fed rate cut, about overall tensions in the geopolitics, mostly it supports the market and stands in favor of the upward continuation. But at least theoretically, downside chances also exist. And here we come into the first test. Our task in the next week and probably a few weeks will be to consider and just keep watching how market will respond on the major resistance areas. And the first test will happen right around 28 area, which is actually major 618 resistance on the daily chart. So if market will break it up, well, that would be the big challenge in favor of upward continuation. If it fails to do this, start downward action. In this case, whether we would like it or not, but chances on some kind of the A, B, C top T pattern will exist. So let's see what will happen. On the lower time frames, on the 4 time frame chart, that's great that our butterfly has hit the target. 2067 has been tested. This pullback is also absolutely reasonable, but this picture that we have on the 4 time frame chart, it is not about the butterfly. It is about the big head and shoulders pattern, right? And for us, here is actually vital to see what will happen with the head and shoulders. In fact, the head and shoulders, of course, we will use it for trading, but it also should serve as proper indicator to understand what will happen on the bigger picture. So normally, if market indeed stands bullish, it has to go from one target to another. So it has to stay above neckline, preferably. It should go to the OP. I'm now speaking about the normal bullish market, and next it should fall to the XOP. If we will see everything is happening, that's everything is okay with this bullish sentiment and bullish scenario, and we just will keep going it. If we'll see that market can't reach the OP, start breaking from the neckline to the downside, taking out to the lows around 2040, that will be bad sign, and it probably will stand in the favor of the bearish action, at least in the shorter term. Failure of the hand shorts here suggests taking out to these lows, or at least challenging them. So that might be very important. And next pattern that we intend to consider, here's, by the way, guys, take a look, some divergence is forming. Next pattern is intended to consider this, of course, the butterfly, because market has completed 1618 target of the butterfly. Pullback is normal, but if we suggest that market stands bullish, we prefer to see minimum retracement, minimum respect to the butterfly. As you know from the Gartley's patterns, that the minimum acceptable reaction when the pattern treats as a completed, because butterfly is actually the bearish reversal pattern. So this target stands at 30% retracement on the whole butterfly body, and it stands 2050. So completion of this level and touching of this level means that the butterfly has worked properly. So it triggered reversal. Minimum target of this reversal is done. So for the bullish pattern, it's preferable to see that market will just test this level and start upward action, just because the 2050 is also the neckline. As some compromise, we could accept retracement to the 2030 area. This actually will be our short-term vital area for the bullish context, bullish scenario. So market should not break it down. So we could use this level as potential to consider as a primary level to watch, and this as a vital area where if we intend to take the long position, we could place our stops below this area. So we should not break it down. If market will break it down, that will put the shadow on the perspective of the bullish scenario, because in this case, market start dropping back to the lows of the right arm, which is not good for the hand shoulders pattern. So that actually two things that we intend to watch on the next week. I do not know what activity will be. Market probably will be thin, but let's see what will happen. So for the taking the long position, we of course will be watching for the same patterns. Probably here once again makes sense to consider the scale in approach to the position taking. So take some minor part around 2050. If market drop to the 2030, then add the bulk of the position here. That led us also to place really tight stop just below the confluence and see what will happen. That's approximately the trading plan that we intend to follow. So that's probably all for today, guys. Enjoy the holidays. See you next week.